Toby York. I'm a chartered accountant and I have been teaching accounting for about 20 years. I was one of the workshop facilitators on the Barnet Micro Business Growth Programme. I delivered the Know Your Numbers workshop, which was a lot of fun. It's always great being in a room full of entrepreneurs. Accounting is often thought about in terms of a technical or functional subject that sort of reflects the way that we run our economy today. But interestingly, accounting, by some estimates, goes back about 10,000 years, which is quite remarkable. There are these little clay tokens that archaeologists have found all the way from Turkey all the way over to what we now call the Middle East, Mesopotamia, as it was then. And these little clay tokens were counting tokens that were used for a sort of proto-accounting method. So we've been accounting for 10,000 years. Remarkable because we think it predates the concept of number notation and therefore predates writing. So accounting came before writing and before numeracy, which is quite remarkable. Modern accounting, we call it modern accounting because it's only 500 years old, maybe a few more than that, is based on a system that was developed, we think, by Venetian traders. And this is what we call the double entry bookkeeping system. And what the Venetian traders' fabulous insight was, quite remarkable insight, was that every transaction has a sort of dual nature. There's this duality to accounting, hence double entry. It reflects duality. Putting this very simply, if you think about, say you borrowed £100 from a friend, what we would say in accounting terms is you have £100, you owe your friend £100. So there are two aspects to that transaction. It doesn't sound very clever, but that's very clever. And it makes accounting a very elegant and timeless system. It's not going to be it's never going to go out of date. It's always going to be the same. It's actually pretty remarkable. Accounting in terms of what it actually means, if you think about accounting in a literal sense, it really means storytelling. You know, the first thing to say about accounting is that it's a verb. It's something that we do. It's like swimming or walking. Well, it's not like those things, but you know what I mean. Accounting is a verb. It's an action. It's something that we do. When we say give an account of yourself, what we're really saying is, can you account for your actions? Can you account for your time? So accounting is very much part of telling a story about yourself. And so in short, accounting is financial storytelling. And the plot line never changes. We start with, what did you start with financially? What did you end with financially? And what happened in between that changed that financial position from beginning to end? That's what accounting tries to do. Well, understanding accounting is really important because it tells the financial story of your business. And I'd go so far as to say if you don't understand your numbers, you don't properly understand your business. Now, there are sort of two approaches to understanding accounting. One is what you might describe as a functional approach. What are my sales? What are my profits? How much cash do I have? Can I maximize my profit? All of those things. And accounting does try to answer a lot of those questions. But one of the conversations we like to have with our entrepreneurs is to look at an accounting report from what we like to say is an integrity point of view. And we're saying integrity in this context as a way of describing the wholeness or the completeness of your business. And what you can do with accounts is you can look at your business and see where it lacks integrity, where it lacks wholeness. So for example, you might be looking at your business and say, well, my staff need more development, or I need more assets. And in order to do that, I need more funding. And therefore, I might need more debt, or I might need more equity, more investment in the business. So it's not always about profit maximization, but it's about developing your business to be the most successful thing it could possibly be. Entrepreneurs always are interested in their profit and loss account or income statement, because that's the one that instinctively they understand. We all know sales minus cost equals profit, and that is an important financial statement. But I would say that actually don't shy away from the balance sheet or the statement of financial position. And when we're teaching accounting and when we're talking to people accounting, we always start with the balance sheet. When I was saying that example before, when I was saying you have £100 and you owe your friend £100, that's a balance sheet. Because what a balance sheet tells you is what have you got, what resources do you have, where did they come from? And that's what we call the accounting equation. Your assets, what you have, are always equivalent to who you owe it to, your liabilities, obligations, and a residual obligation we call equity. So the balance sheet, I would say, is a key financial statement and one that entrepreneurs are often a little bit frightened of, but don't be. It's a very, very simple statement. What have you got? Who do you owe it to? And that's basically what a balance sheet does. So the balance sheet, the profit and loss account, and of course the cash flow statement. So many businesses are able to make a profit without generating cash because of the way that we report profit. And actually cash is, of course, really, really important. If you run out of cash, then you're going to be out of business pretty fast. So those are the three statements: the balance sheet, first and foremost, the income statement, the profit and loss account, and the cash flow statement. I would say that two key reports you should always be looking at when you're an entrepreneur looking at your financial statements. One is what we call the aged receivables or the aged trade debtors. And that's very simply, it's a list of all of your customers, how much they owe you, and how long that amount has been outstanding. And that actually comes back to cash flow, because if you've got customers where you're making sales to them on credit, I'm assuming, so you're giving them time to pay. If you're making sales, you're booking those sales, you're booking that profit, but you haven't received the cash. You need to know when is the cash coming in. And that aged receivables report is a very important report. It actually tells you which customers are slow at paying, which ones are good at paying, who owes you money, and you act on it. You go and find out why are they not paying. You need that cash in the business as soon as you possibly can. And then the other side of that is the aged payables report, which is a list of all your suppliers and when you're expecting to pay them. But the aged receivables report, I would say, is a key report that you want to be keeping an eye on very closely. And then the other thing I would say is you decide. It's your business. They're your numbers. You decide what are the key metrics for your business and find out how that information can be presented to you, and keep an eye on those things too. Firstly, I would say don't make the mistake of thinking them purely in terms of being a compliance partner. Yes, of course, they will fill out your VAT return. They'll do your tax returns. They'll do your statutory reports. They'll run your payroll. Those are all important functions, but that isn't the most you can get out of your accountant. You want all of those things and a bit more. If you let them, they can actually be a business partner in growing and advising you on how best to grow your business. I would also say don't dismiss your bookkeeper. With the way technology works now, most accounting systems are available on cloud. You're given access to a dashboard. You can see in real time what your bank balance is, what your customers owe you. There's a lot of information immediately available, which your bookkeeper can actually give you access to. And there's a sort of fuzzy edge between bookkeepers and accountants. So use your bookkeeper and your accountant to your best advantage of trying to grow your business. I think the other thing I would say is that be clear about your expectations. Let your accountant know what you want. Let them know when you want information, what reports you want, what your expectations are of them, and give them a chance to deliver that. And I think finally, the last thing I would say is good advice is worth paying for. So don't expect them to do it for free. Don't expect them to do loads of work on a pittance. If you don't pay them proper money, you're not going to get proper advice.